Market Outlook. Calendar Week 13. Special Report, Iran Conflict. The 12th calendar week was not defined by a single macro event, but by a geopolitical situation that had a direct impact on energy, transport, and risk premia. The Iran conflict remained the dominant disruptive factor. At the center stood the Strait of Hormuz as a critical corridor for oil, gas, and shipping. Attacks on energy infrastructure, restrictions on maritime traffic, and the political response of the states involved increased headline sensitivity across markets. For price formation, this meant an additional geopolitical risk premium on energy, freight, and hedging costs. This connection was relevant for digital assets because it does not affect crypto in isolation, but first moves through the traditional macro channels into overall market structure. The mechanical transmission chain is clear. Rising energy prices increase inflation pressure. Higher inflation pressure changes rate expectations or keeps them at a restrictive level. A more restrictive rate environment stabilizes the US dollar and keeps real yields elevated. Higher real yields shift capital allocation away from rate-sensitive and risk-oriented segments. As a result, market breadth in digital assets narrows. Capital concentrates more strongly in liquid leading structures, while the broader altcoin segment becomes more sensitive to outflows, thinner order books, and wider spreads. In this way, the Iran conflict in Week 12 was not an external side issue, but a macro factor with direct transmission into the crypto market. This situation is also reflected in two simple markers. Bitcoin dominance remained high. The Crypto Fear and Greed Index most recently stood at 23, placing it in the fear range. Taken together, this does not indicate broad risk appetite, but rather a market structure focused on relative size, liquidity, and more defensive positioning within the digital asset segment. Quantum data analytics did not generate any research signals in this environment. The reason was operational. In an event-driven market phase shaped by geopolitically triggered price impulses, the risk increases that models may misclassify the regime. This is exactly where filter adjustment and retraining apply. When short-term moves arise from exogenous news flows, energy price shocks, and abrupt cross-asset reactions, the reliability of signals based on more stable patterns declines. For that reason, no activation was made. This was not a judgment on the market, but a methodological decision to avoid regime misclassification. For calendar week 13, the focus returns to clearly identifiable event windows. On Tuesday, the preliminary purchasing managers' indices from the Euro area and the United States take center stage. They directly affect the growth path, the US dollar, and the rate structure. On Wednesday, Germany's IFO business climate follows as a signal for the European economic axis. On Thursday, US initial jobless claims move into focus. On Friday, the final Michigan sentiment reading follows. These data points do not act in isolation. They run through the same transmission channel into the markets. Growth and inflation influence rate expectations. Rate expectations affect the US dollar and real yields, and from there, pressure or relief emerges for risk assets and digital assets. The geopolitical situation remains an ongoing disruptive factor, because any new development around energy infrastructure, transport corridors, or the Strait of Hormuz can amplify or override existing market reactions. Operationally, this means one thing above all for Week 13. Elevated volatility and elevated slippage are to be expected primarily around the European and US data windows, as well as around geopolitical headlines. This applies in particular to market phases with thinner order book depth, rapid repositioning in the derivatives market, and simultaneous moves in the US dollar, bond yields, and energy prices. For digital assets, not every time window is equally relevant. What matters most are those phases in which macro data and geopolitical headlines affect the same pricing channel at the same time. This report does not constitute investment advice. and contains neither a recommendation nor a solicitation to buy or sell crypto assets or other financial instruments. The analyses and assessments of quantum data analytics serve exclusively informational and research purposes. Every investment decision is made independently and at the investor's own risk. Strategies may be adjusted, delayed, or fully suspended at any time depending on market conditions. Quantum data analytics. Analytical, strategic, innovative.